Electrical vehicle or EV stocks are among the most hyped up stocks right now, and probably for good reason. Because we're clearly moving in the direction of saying goodbye to gas and oil and to save our planet by adapting to environment-friendly vehicles. And that is just one of the reasons why EVs are cool, because we're not even talking about autonomous driving, and there are other cool features. Now, unless you've been living under a rock, you've probably heard of Tesla, the most famous of them all. If you're a bit savvier, you probably have even heard of Nikola and Chinese EV companies like NIO and XPeng. You might even know that Ford and GM are also working on EV cars. But what about EV companies that are not as big, or those who support the EV ecosystem but are not directly making electric vehicles? Would it be helpful to you if I revealed my top 7 EV-related stocks I've been following and the optimal price you could buy them at? Awesome, and that's what I'm going to talk about today. So hit that like button to help me with the YouTube algorithm, subscribe to never miss out on my videos, and let's dance our way to the intro! Invest Divas and Divos. I'm Kiana, Danial, a 4-time and a newly best-selling author and the founder of the Invest Diva movement, the march to jump on to take control of your financial future and to make your money work for you. My mission is to help 1 million moms start investing on their own by the year 2025. So if you are a mom, or if you know a mom who could benefit from taking control of her financial future, don't be stingy. Spread the word and help us make this huge impact, because as my 2-year-old daughter says, sharing makes us all happy.
Sharing makes us all happy.
EV stocks are super hyped up right now, and the majority of them are overvalued at the time of filming. If you're a long-term value investor like me, you may be looking for optimal prices to purchase your value EV stocks and then hold them for at least a year to avoid paying too much capital gain taxes. We're going to go through the list today based on market cap size. If you're new to my world, you need to know that I create my investment strategies using a process I call the Invest Diva Diamond Analysis. And just like a diamond, it has 5 points: capital, intentional, fundamental, sentimental, and technical. If you don't know what I'm talking about and you want to avoid a major brain meltdown, you need to go watch my on-demand free training at learn.investdiva.com/yes. Otherwise, you might feel like I'm talking a different language when I go through my analysis today. The link you should use to register for today's training is down in the description area below. And EV stock number 7 on my list is Electrameccanica Corp, so low with a $586 million market cap. Electrameccanica is a Canadian designer and manufacturer of environmentally efficient electric vehicles. I'm going to use stockcard.io today for my fundamental analysis. You can find the link to StockCard in the description area down below. In taking a look at solo stock here, it looks like the company needs some improvements, especially in its operations and finances. The combined market sentiment here appears neutral, with some investors actually shorting it. Considering this is a very young company, I'd categorize this as a high-risk asset. Looking at the solo price chart, volatility has been ever present since the company went public back in 2017, and in the past 2 years, it has not yet been able to reach the all-time high level of almost $16. The price is currently consolidating below the Arcimoto cloud, and if you throw the Fibonacci retracement levels on the chart, you'd notice that the key resistance level currently lay at 6.72 and 4.41. If I were to add solo to my portfolio, I'd consider setting my buy limit orders at these prices and then hold until I reach my preferred rate of return to make a profit. Number 6 on the list is Arcimoto, FUV, another small cap company with around $749 million in market capitalization. Arcimoto Inc. is in the business of manufacturing ultra-efficient 3-wheeled electric vehicles. Checking this stock again on stockcard.io, you'd notice that this company is actually in a more favorable position for growth. But just like Electrameccanica, this needs improvements in its operations and finances. Looking at the chart, on the other hand, you can easily see that FUV is way overvalued compared to Solo and is currently at around a brand new all-time high just above $25. Adding our friendly Fibonacci retracement levels to the chart, we quickly can see that some key psychological support levels are at 1969, 1624, and 1323. You can consider a combination of these as your buy limit orders to get your hands on Arcimoto shares at a more optimal price. Number 5 on today's EV stocks list is BLNK. With just over $2 billion in market cap. BLNK doesn't make cars, but it provides electric vehicle charging services. The company offers both residential and commercial EV charging equipment, enabling EV drivers to easily recharge at various location types. It went public back in 2008, and its stock price hit over $3,700 before crashing all the way down to its current range below $50. But hey, despite the massive crash, it stayed in business, so they're probably doing something right and there is hope for the future. Looking at its profile on StockCard, we notice that similar to Arcimoto, it has high growth potential but lacks stable operations. Specifically, it shows a few shortcomings in its revenue growth, performance, and profitability. The market sentiment for this stock is actually pretty bearish and has put its stock price under a lot of pressure. Now, let's take a look at the chart and apply my buddies, Arcimoto and Fibonacci. If you don't know what these are, you've got to attend my free training at learn.investiva.com/yes. The stock price has been getting more volatile, but still creating higher highs and remains above the daily Arcimoto cloud. Fibonacci retracement tracking the most recent uptrend since November 2020 shows the key support levels are at around 42, 36, and 28. This would again be a buy and hold for me, and based on past price action, the next resistance level is set at $94. Number 4 on the list is XL Fleet with over $2.5 billion in market cap and is in the business of providing vehicle electrification solutions for commercial and municipal fleets. There is not much hype around the stock, but looking at Glassdoor, they're actually actively hiring for new employees and talent, which got me interested because it shows they're optimistic about their own future. Looking at the chart, its price is actually already at the 61% Fibonacci retracement level and has broken below the Ichimoku cloud, which means if you really want to add this to your portfolio, you could consider purchasing at the current market price at around $19 or set a buy limit order at $15. Number 3 on the list is Fisker at over $4 billion market cap. This is the one that I actually bought a bunch of through SPAC, a company that acquired Fisker in 2020, so my average cost per share I paid for this was like $3, which is pretty cool. Fisker is a California-based e-mobility service provider with sustainable vehicles focusing on revolutionizing the automotive industry by developing emotionally desirable and eco-friendly electric vehicles. This is another undervalued EV stock, if you will, because it's been trading right at the 38% Fibonacci retracement level of around 1450 below the Ichimoku cloud, which means it could drop even further to the next Fibonacci level at 12.54. The key support level for FSR is at 8.91. Number 2 on the list is Workhorse Group, WKHS, with over $4.3 billion in market capitalization. The company designs, develops, manufactures, and sells high-performance medium-duty trucks with powertrain components. One of its products, E100, is an electric powertrain, which is an all-electric medium-duty truck. StockCard shows the majority of investors are overexcited, while it has fair growth potential and needs improvements on its operations. I first started looking at Workhorse back in September 2020 for our premium investing group members when its price was $14. It has since reached our profit target, which was $39, and then moved even higher to $40. So clearly, the price seems overvalued. But some investors may argue that since this is just the beginning of electric powertrains, and especially with Joe Biden's EV push, even at this high price, it could be a bargain. Based on the current highs, the key Fibonacci support levels are at $31, $25, and $20 respectively. Before getting to the number one mildly less hyped up EV stocks based on market cap size that you could consider adding to your portfolio, and if you like this analysis so far, please give this video a like. It will help with the YouTube algorithm, and if you share it with a friend or family member who is interested in being a part of the EV revolution, that will be super awesome too. Gracias. The last EV stock on my list today is QuantumScape, QS, with over $15 billion in market cap. This company develops the next generation solid-state lithium metal batteries that can be used in electric vehicles. The company has been in operations for nearly a decade and is backed by Volkswagen and Bill Gates. In December 2020, the company announced that its solid-state batteries for electric vehicles will charge faster, hold more power, and last longer than traditional EV batteries. Stock chart also shows a high growth potential for this company, and meanwhile, it's actually not hyped up. In fact, if you look at its chart, it looks pretty gloomy as it has just broken below the Ichimoku cloud and approaching the 78% Fibonacci traceable level up $37. Now, you know what that means, right? This is actually a very typical behavior for newly IPO tech stocks. The same thing happened to Facebook, Cloudera, and so many others. And the main reason why I don't typically invest in stocks right after they go public. I wait for the first round of big hedge fund managers and boys of Wall Street to get in, make their profit, push the price down, give me more historical data that I can analyze, and then I get in. With that, I actually just bought some QS shares on Monday as I was making this video, and I set my next buy limit orders at $37 and $23. Now, please keep in mind that investing involves a risk of loss, and just because I bought a stock, it doesn't mean that you should, because we are likely very different people, have different levels of risk tolerance, financial situation, and financial goals. Investing is personal. You should not only invest based on what you heard from somebody on YouTube, no matter how awesome they are. I'm putting this out here for your guidance, but if you really want to learn to invest on your own so you don't have to rely on people like me on YouTube and TikTok, then you have got to go and watch my free training as I explain my exact process of developing an investment strategy. I guarantee you it's going to be worth your time. I'll see you at the training. Bye-bye.
Savvier.
You ready to go?
Savvier.